Ogbalu III. I serve as a Divisional CEO of Interswitch Inclusion, and I'm of the group that is, its business is really about how to include as many Nigerians and indeed Africans into the financial services and payment space. Financial inclusion is really about including as many people who today are excluded for one reason or the other into the financial services space. So financial inclusion is those collection of activities, those processes, those products, and those efforts that are taken geared towards bringing as many unbanked Nigerians into the financial services space. So that's what financial inclusion is all about. Financial inclusion hasn't been able to scale for a number of reasons. One is access. Access is a major challenge. A situation where a number of local government areas within Nigeria don't even have a single bank branch. A situation where we have touch points that are not sufficient enough, to make sure that financial services gets to the common man. So if you take, for example, today bank branches in Nigeria, you have a situation where we have about 6,500 bank branches across Nigeria. So if you compare us with a country like Brazil, that has similar population, one single bank in Brazil has over 5,000 bank branches. So there's the access challenge. A lot of Nigerians don't have access to banking or financial services within 5 kilometers of where they live. Secondly is you talk about having the right product. If you don't have the right product, then it becomes financial inclusion for the sake of financial inclusion. The people, as we know today, are in need of savings products. They are in need of loans to be able to scale their businesses. They are in need of solutions that solve their remittance challenge. So we have to be able to have the right type of products targeted at these people before we can actually hope to include them. Okay, today we don't. The traditional financial services today places a lot of requirements on the level of KYC that is required. Most Nigerians don't have that means of identification that is required to open a bank account in the traditional sense. Okay, there's also the issue of documentation and the things that they require to be able to access those financial services. And of course, they look at financial services as being somewhat elitist, rightly or wrongly. And thirdly is the issue of trust. The average man still looks at financial services and looks upon it, or the traditional financial services, and looks upon it with some level of distrust or some level of suspicion. So we need to fix the access problem, we need to have the right product, and we need to be able to solve the issue of trust. And I think that we can do that to include unincluded Nigerians. I spoke about the challenge of exclusion, what leads to exclusion, and I talked about 3 pillars. I talked about access, having the right product, and building trust. So my answer to you will be along those 3 lines. The first one, speaking about access, I think it's not acceptable that certain local governments across Nigeria have almost no semblance of financial services. Okay, so one of the ways that we are going to solve this challenge is to make sure that every Nigerian has access to financial services within at least 5 kilometers from where he lives. And one of the ways is to make sure that there is an agent, um, okay, in every single ward nationwide. Those are some of the targets that we set for ourselves here at Interswitch and that we are looking to achieve. Okay, so access, we must make sure that both the traditional banks, both the traditional financial services providers are able to achieve some level of reach, such that people who are in those unserved communities at least have a place where they could get some financial services offered to them. Secondly, we talk about products, having the right products. A lot of what we have is people trying to sell a product to consumers without really even understanding what the consumer wants. So we need to be able to sell the right products, get to understand what the needs of those consumers are, begin to solve their problems, and that's when they are willing to pay you for providing such a service. Okay. Thirdly, again, also in terms of the product, we need to have the right partnerships. There's been this age-long argument: is it the banks or is it the telecoms operators? I think that both are important, in terms of this journey towards achieving financial inclusion. One of the initiatives that we have done successfully here at Interswitch is the concept of co-creation. We took the view that we are not in a position to create all the products that the industry would need. So we've identified partners in different sectors, in different parts of the economy, and we're partnering with them to create products, okay, that will be suitable. We're partnering with insurance companies, we're partnering with banks, we're partnering with pensions companies, we're partnering with asset management companies, different people from different areas, and we take the time to understand the needs of the consumers, and we co-create a product that will be able to address their needs. So the right product and the right partner is very key. And thirdly, speaking about trust, we need to be able to change the trust deficit that exists in these excluded communities of adults in Nigeria. These people are financially active, okay? Even though they are excluded from the traditional financial services, they pay school fees, they buy food, they trade. So they actually could benefit from financial services. But the issue of trust needs to be solved. And I think there are 3 pillars to solving the trust deficit. One is awareness. The consumer needs to be able to know what is really available to him in the first place, what the services are, what the benefits are, what he stands to gain from each of those services. That is one pillar of building trust. Secondly is the consumer experience. The consumer experience stems from, really just making sure that his interaction with whatever product is being sold to him, from the point of view of the sales, to use, and all the way to after sales types of support. It needs to be a seamless experience. Things to do with dispute management, things to do with making sure that transactions that they come to do are successful, and that they do not have any cause to worry about their experience, okay? The third pillar, that needs to go into trust is, that operators need to be able to keep what their brand promise says, okay? If you commit to doing something for your consumer, then you must be able to keep your word. If a consumer, for example, just take an example of, we say, within the mobile money space, if people are taking deposits out of consumers, the consumer needs to be sure that every single time that he asks you that I need this money, he's able to access it. Okay? The consumer needs to be sure that because you have said to him that you are going to earn this amount of interest, that he's going to actually earn that interest. Hidden charges, should also not be part of what we offer to the consumers. We need to explain the product to them in plain English in such a way that they know exactly what they are buying into and what they are getting. These pillars will certainly contribute to solving the trust deficit. The government needs to do its own job. And let me start by saying that the assignment is not just for the government, it's going to be a combination of the government and the private sector. The government has to put in place an enabling environment for people to be able, private sector to be able to play in that space and therefore achieve the objective of financial inclusion. So starting with the government needs to have the right types of regulation and the flexibility to continue to adjust, until we find a model that actually allows us to be able to achieve scale. Secondly, government needs to get other agencies. Government needs to not just get CBN, but they need to also get NCC. They need to get other arms of government aligned on this objective. Because if everybody is in alignment, each of those agencies will take the right decisions to make sure that the stakeholders that play in their spaces do whatever is necessary, to make sure that financial inclusion happens. But on the private sector part, government also has a role in terms of, the kinds of entry barrier, so for example, if government overregulates prices in terms of the services provided to in the financial inclusion space, then it discourages operators from getting into it, and then operators are not sure how much of a return they are able to earn by investing in that space. So government needs to play a role of enabling, removing some of the barriers. So for example, also, if you put a signage in most cities in Nigeria, the cost of having those signages up, become a constraining factor. So operators, instead of, really going all out to push awareness, are worried about the cost that they will bear by making that awareness as pervasive as it needs to be to achieve financial inclusion. So if you ask me, I would say let government get all of its agencies aligned on the objective. Let government look at all the different stumbling blocks, not over-regulate. I think that government needs to, reduce its regulation on price and allow market forces to be able to determine this. And I'll just give a very quick example. The regulator says you must charge X amount of money because he believes that that is the price point that it will be okay for the average ordinary man. But the challenge with that is he is not considering that at the initial stage, until we achieve scale, that the price point needs to be at a point where it is also profitable to the operators. So I think that government can help by reducing the level of regulation, leave some room, for market forces to be able to drive things, and also to allow the operators to make a decent living. Further down the line, the agents and the people who play in the space need to also be able to make a decent commission for it to be interesting for them. And I think that we can, working with government, make sure that the model is right so that even the agents and the consumers also get value. I think that government can also help from a consumer protection standpoint to make sure that operators such as ourselves, keep to the right standards, make sure that the customer never gets the short end of the stick, and with all of that, trust is built and we are able to deliver service to the people that are excluded. Banking is really about, bringing as many people into their ecosystem, in terms of savings, in terms of deposits, and so on. Yeah, being able to also leverage the funds that they have been able to pull up within that ecosystem to provide other services to other customers, such as loans and to finance projects and so on and so forth. And then by so doing, the banks make a decent return. So it is in the interest of the banks that as many people who are currently excluded from the financial services space are included into the financial services space. Now, the banks may need to, for example, change a bit of their model in order for them to be able to achieve this. If you look at the FMCG space, even in war-torn places, you are still able to get a bottle of Coca-Cola in those locations. Therefore, banks and financial services need to learn a few things from the FMCGs on how they are able to extend their services. Coming to what I think they can do immediately, the conversation around financial inclusion needs to be elevated. It cannot be treated as a side business for the banks. They need to be able to elevate it all the way to an executive level, where at each of the banks there is an executive level person who is responsible for driving financial inclusion. In that way, the plans are measured and the objectives are measured, and there is a responsibility to make sure that it is delivered. Secondly, I think that the banks can leverage existing players in the financial inclusion space, be them mobile money operators, be they also super agent operators such as ourselves. Now that we have locations scattered across Nigeria, we are able to get banks to the depths of inclusion that they've not been able to achieve, just because we have more touch points and we are able to render their services, on their behalf in those locations. Thirdly, I think also that the banks need to be able to think a bit more long term. There's a fortune to be made in financial inclusion. These people that we say are excluded, they are excluded, but they're actually financially active. They are the plumber, who earns his wages, but who puts his money under the pillow in his home. There's the mama put person who cooks and serves on a daily basis, but whose daily wages, just never see the four walls of a financial services operator. So these people are financially active. So the bank needs to take a long-term view and be able to invest for long-term and know that it is going to be able to make a decent return. But that patience needs to be there. And finally, the banks, the regulators may consider to say, okay, for every bank that is in a particular state, other than being in the state capital, you need to achieve a minimum coverage within the state where you have presence, either as yourself or working with a third party to achieve that. So I think in that way, we're able to bring financial inclusion closer to the target, who is the unbanked. I did say that financial inclusion has become a national emergency. Whether they know they need it or they don't, it's incumbent on the government of the day, it's incumbent on players such as ourselves to be able to sell the value in financial inclusion to these people. Coming to whether they need it, what they need is to be able to live their lives. They want to be able to just get on, be able to buy what they need. They want to be able to sell what they want to sell. They want to be able to trade in one way or the other. They want to be able to pay their bills. They want to be able to buy food and so on. So that's just really part of living. But what we as operators need to be able to let them see is that by gaining access to or leveraging financial services platforms, you're able to, for example, if you're a trader and you're trading at a certain amount of money, maybe 500 naira every day, how much better would that improve your life if you're able to trade at 1,000? If your capacity to trade is increased because there is money being given to you as a product, or because we have all saved our monies together and we are able to help out the smallest of us when we are in need. Okay, so financial inclusion is necessary, it's absolutely critical, because they are able to, some of the services that they do today. Insurance, for example, has a 1% penetration. It is not because the people are not underwriting their own risk. Today, when they have an issue, they still have to find a way either to pitch in together or find monies to be able to meet those needs. Okay, so they are personally underwriting risks, which an institution is better positioned to handle. Do you understand? So they have these challenges, but they may not see the need for it. But we as providers need to be able to sell the benefits. The benefits include the ability to save and therefore be able to leverage a larger amount of pool rather than the small savings that you're able to have. The ability to be able to make your deposits and earn an interest. If you put your money under the pillow, it is not earning any interest and it is not contributing to the pool of capital that the country would need to be able to develop. So there are a lot of benefits. They do need financial inclusion. It is incumbent on us to sell the benefits to the consumers. The risks that come to mind are actually a fact of life. They exist, and they are bearing those risks today. The risk that they would bear by adopting financial inclusion, is nothing near the risk of what they are bearing today. So, for example, if someone keeps his money under the pillow and it is stolen or poses a security risk to himself, okay, he's bearing risk anyway. So risk is a part of life. I think there are things to do with maybe fraud, especially where they are dealing with an entity that is not carefully vetted. That exists. But it's also mitigated by the fact that the players in the financial inclusion space are people within their communities. They are people that they already know and they are familiar with. Okay, we could also talk about issues to do with technology failure. most of financial inclusion is driven by technology. So if network failure happens, a bad experience to the people, but these are facts of life. If, for example, power is not available, it might result in a denial of service in certain areas. But the point I'm trying to make is there's no risk that they will bear for being included. Yeah, there is anything compared to the risks that they are living with today and managing. Okay, and it's also incumbent on both the regulators and the operators to make sure that not just these people are able to access the services, but to make sure that they do not bear any risk by so doing. So, for example, the regulator has taken the lead to say, okay, if you must play in this space, you must have X amount of collaterals. Okay, you must have some form of fidelity cover, from a reputable insurance company to help to cover some of those risks. So even though you could say there could be one risk or the other, most of the risks are mitigated by virtue of either regulation or the practices that the operators are put in place to make sure that their customers are not. Okay, I'll tell you some of what we've done, and and then I can talk about a few of the other things that can be done. We took a view of risk and said we are going to do 3 to 4 things to make sure that the risk is minimized or even eliminated. First of all of our services, we carefully selected the limits of transactions that can happen in those agent locations or different products. So what the limits do is to make sure that the chances or what makes it lucrative for a fraudster to do one fraudulent transaction and make a lot of money, or customers will lose so much more money, is reduced just because we've placed limits on the kinds of transactions that can be done. Secondly is in even recruiting the agents, the level of KYC, the means of identification that we require of them, guarantors, and some of the other things that we require, we use that to reduce the risk that that particular agent will be a fraudulent agent. Thirdly is we also took out a fidelity cover. The fidelity cover says that if customers are, have an issue due to, a fault of ours, and we are able to make sure that the customer does not get the short end of the stick. Okay, and then there's a natural risk mitigation also that exists. What we find is, for example, our agent network, the agent will not trade at a level that he is not comfortable at trading. So, for example, an agent who already has a daily turnover of a certain amount will typically not trade way beyond that daily turnover. So he already has a natural way that he is able to manage his risk, But some of these measures are the things that we have put in place to make sure both our agents and our consumers never get the short end of the stick. Other things that can be done are, allowing the consumers to be able to validate, who they are dealing with, very easily. Those are some of the things. For example, when you get to an agent location, you are able to dial a short code, that confirms to you that this particular agent that you are dealing with is a genuine and a valid agent. So there are a number of things that have already been done, and I think that there's still more that can be done. We took a view of Nigeria, and by the way, Interswitch over the years, has, worked with banks and financial services providers. we see that it is incumbent on us to help those banks and financial services providers to bring in as more people, such that once the pie is bigger, our bank partners and so on are more profitable, and it's good for everybody in the ecosystem. So we decided that the one way that we can really help financial inclusion to happen is by building as much more touch points across Nigeria as possible. A study by the Gates Foundation in, I think the first one was 2012 and the second was in 2014, says that Nigeria has just about 47,000 financial services touch points, and that includes all the bank branches, all the motor parks, all the microfinance banks, all the savings cooperatives, all even the post office locations. So they looked at everywhere where you can do a financial service, and they brought all of them together, and it came to, including offsite ATMs, and it came to 47,000. That is grossly inadequate for a country our size. So if you compare us to Brazil, like I said before, one single bank has over 47,000 ATMs. Okay, one single bank has over 5,000 bank branches. So we have an issue with the touch point, which speaks to the access challenge that I talked about before. So we've decided that over the next 5 years, we are going to build 150,000 agent locations across Nigeria. We started about 15 or 17 months ago. Today we have over 11,000 agents, and we are growing rapidly. We believe that by adding 150,000 additional touch points, it will solve the gap created by not having enough brick and mortar branches. It will solve the gap of having so much cash outside of the financial services space in terms of digitizing the cash. It will also help the banks to be able to extend their products and services deeper into the rural community. So we believe that by driving agent networks, a large agent network, we will be able to help the banks even to reduce their costs. The cost of an average bank branch is so prohibitive, and it begins to affect the bank's ability to be profitable. So we think that if in place of one bank branch, we were able to provide 100 agent locations, we would have been able to do much more than a single bank branch would have been able to do for the people living in those communities. So we want to increase the touch points. We want to use that to bring more people into the financial services space using very high quality products, which we develop in partnership with some of our partners, who include banks, who include pensions companies, who include asset management companies, and so on, to make sure, which includes also insurance companies, to make sure that we have the right products going to these people at the bottom of the pyramid.